Hello, this is Steve Malone with Compass Effects. I hope you're doing well today and you get some good trades. One of the currency pairs I want to talk about today is the Kiwi dollar. And I think the Kiwi dollar has a lot of opportunity to push higher than it is right now. Now, we saw today during the FOMC meeting minutes a little up and down action that took place here. And we kind of bounced up and down between the weekly high, based on the average daily range calculator, up to above the weekly high extension number 1. And I think there's a possibility that we see overnight that the market pushes up to 88.40 and beyond. And there's a couple of reasons for that. Let me talk about that. First off, we've seen that the market's pushed higher and higher and maintaining more or less higher lows, except for this low we had during the FOMC meeting as the market initially started going down, faked everybody out and pushed back up. You can see here that even in the Traders Dynamic Index, we have these higher lows suggesting more upward movement. If you go on to the 4-hour chart, you can see that from the last swing high to the last swing low, we're now up at that 141.4, and look where the 1618 is sitting at, up there right close to that 88.40 area. But I don't think that's necessarily it. If you step out pretty far out, you're going to find that we had a high going back to July 2011, a high of 88.40, 88.44, depending upon where your data comes from. That's where the market's heading to. And look, you can see that we kind of have a 1 flat, 2 flat, now the third push to the upside. And my thinking is, based on what I see here in the TDI and the look here, look at that market baseline, a nice upward move. Again, higher lows seen here. I look for a push up overnight beyond 88.40 and higher. Now, there's some in the marketplace that have already suggested that we could see this push on up towards 89 and potentially up to 90. Now, why would that happen? Well, it falls back into what's going on during the summertime. During the dog days of summer, most of the market has low volume and low volatility, just not a lot of movement. And a lot of the major currency pairs are stuck in kind of a sideways consolidated frame of mind, not really making much movement at all. So where does an institution go out and find some appreciation, find some movement in the marketplace one way or the other? Well, it falls back on the carry trade, especially if the market's not trending. Now think about this. The Kiwi dollar is paying 3.25% to hold it. So what's ending up happening is you do the carry trade, buying the Kiwi, and then you sell the dollar. And what's the dollar interest rate right now? 0.25% at best. So the interest rate differential there is 3%. So institutions and sizable real money accounts like large pension funds, they're looking for appreciation in the marketplace. And when you have a market that's not making much movement, especially in the currencies, kind of a sideways movement overall, you go into the carry trade. So two good reasons to see the Kiwi push higher. Number one, going for an old target. The market loves to go back to where it's been before. And if this becomes a barrier, 88.50 let's say becomes a barrier, I see it get knocked out as the market looks to increase the carry trade positions in order to gain some yield during the dog days of summer. Well, this is Steve Malone with Compass FX. Hope some of the information here will help you, but look for that Kiwi to push higher. If you're down on an intraday chart, let's say you're down that 15-minute chart, we could see a slide back over if the market holds the 87.80 mark, which I expect it to do that. Then I look for the push higher. Now, I'm looking at anywhere from 87.80 to 88. If the market holds this, it's going to use this as a stepping stone to the next level higher. We've already reached up there to the 88.25 area during the FOMC meeting minutes. If the market can kind of hold this area right around the 88.20 as we go into the Asian session and then into Europe, we're going to see this push higher towards 88.40, potentially above 88.50 if the carry trades continue to increase in volume. Well, this is Steve Malone with Compass FX. Y'all make it a great day. Get some good trades. We'll talk to you next time. Bye-bye.